Welcome back, everyone. Today on the Joseph Carlson Show, Lululemon is one of the most worst performing stocks in the market this year. In fact, year to date, before market close, it was down 42%. But they just reported earnings, and the stock is up 11%. Investors are, of course, happy with what's going on. We're going to take a look at the earnings. We're going to see why the stock is up 11%. We're going to be looking at the future growth of Lululemon, and I'll be revealing why I think one of Lululemon's competitors, a company that I actually think is a Lululemon competitor, is none other than Costco. Yes, we'll be going into why Lululemon is now competing with Costco. We also, of course, have some other big news. NVIDIA is up another 5%. It's the daily 5% gain for NVIDIA. If you followed the stock, that's what it feels like. It goes up around 3 to 5% per day. Well, today it went up another $60. It's now $1,224 per share, which makes it have a market cap of above $3 trillion. NVIDIA is now a bigger company than Apple. It's bigger than Apple. That's something that didn't even seem possible. Didn't even seem feasible. You had to be crazy. You really had to be nutty to believe that like 4 or 5 years ago. But now it's surpassing Apple, and it's on track to becoming the largest company in the world. In fact, if we look at it right here, it's right on the tail of Microsoft. Like, it's just $100 billion away, which given NVIDIA, that's like, 4 or 5 days. Like, that's nothing. It can go up $100 billion in a matter of hours, let alone days. So we're going to be talking about NVIDIA, the rise of the company, what this means for investors today, and the assumptions priced into this stock. And then finally, we also have some news that there's some tomfoolery going on at YouTube. YouTube apparently is doing an insider investigation into employees that are potentially leaking videos that are not released yet. So when you upload a video to YouTube, you might upload it in advance, so then you can do checks, you can make sure it passes the copyright, you can make sure it's monetizable, and you have everything looking good beforehand. You can even privately view the video with a private link just for you to kind of review it and just make sure it all looks like your local file. Well, as it turns out, there's some employees that have access to these private videos, and YouTube has a suspicion that some employees are leaking big videos, like the leaks of PlayStation and Nintendo and the leaks of Grand Theft Auto. We'll be going over all of this, plus much more. Let's go ahead and jump in. Now, of course, we start off with Lululemon. They just reported earnings, and the stock is currently up 13%. And this comes after a really tough start to the year from Lululemon. In fact, if we look at the S&P 500, so all 500 companies, and we organize them by the ones that have performed the worst year to date, Lululemon is number 2, right there between EPAM and Intel. So these are really companies that have been beat up this year. It's down 40% year to date. So it's about time we get some good news, and we have that with this most recent earnings report. There were a lot of jitters going into this earnings season. A lot of people concerned that Lulu would be down 10% because they're losing market share. They're not meeting their earnings per share estimate, but they actually posted a decent earnings report. They slightly beat on their earnings per share. They beat on their revenue. They came in just under their same-store sales, but only by 1%, and on a constant currency basis, they meet their same-store sales. They also authorized an additional $1 billion for their buyback policy, so they're bumping up their buybacks as well. So overall, this is a good enough report to cause a beaten down stock to rise 13%. But there's another concern I have for Lululemon shareholders, something that I think you should consider. We know that Lululemon is facing increased competition, and that's something I hate to see. I hate it when there's more and more competition for the business that you're in, when you see other brands rising up. It's the same issue I have with the caffeine bubble, with so many companies going into caffeinated beverages. I see something similar with the athletic leisure category. Of course, we have brands like Vuori. This is another high-end athleisure brand, and you'll notice that the clothing is very similar to Lululemon. You see these nice fabrics, the shorts, the yoga pants. These are anywhere from $90 to $110 like they have listed here on the website. We have the brand BYLT. I've seen this one increasingly in different malls and different shopping outlets. And again, it feels very similar to the type of things that Vuori or Lululemon make. So you have another brand that's pushing into sales, competing, and taking market share. You have Fabletics. I see this one advertised everywhere on social media. And although this isn't identical to Lululemon, it's very similar. They have high-end yoga pants and athletic leisure. And then, of course, we have the king itself, Nike, which has the ultimate advantage over these other companies, which is the Nike swoosh logo. Something that is irreplaceable, that Nike puts everywhere on everything because it sells everything they put it on. Nike is not a direct competitor to Lululemon right now. They're in kind of different categories, but as Lululemon pushes more into sports and especially shoes, it's going to pit itself against Nike more directly. Competition is a wonderful thing for the economy. It's great when companies compete against each other. It's great that customers get lots of options, but in terms of investments, I don't like investing in companies that have lots of competition. I like investing in monopolies, or at least monopolistic companies, ones that have a deep-rooted, concentrated market share of their given category. So a lot of companies that I'm investing in are ones like Amazon, that owns a huge portion of cloud hosting, or Apple, that owns 40 to 50% of the phone market, or Google that owns 90% of the search market. Now, of course, the companies I own face some competition in some regard. They don't outright own the entire market, but they have limited competition. And what I see with the athletic leisure category is just the opposite. I see it as another category where I see more and more increased competition. One of the companies that I own that I believe is becoming a competitor in this space is Costco. Now, you might think that Costco is not a flashy brand. There's no one high income that would shop at Costco and buy their clothing. After all, a lot of the stuff they sell screams dad shoes, flip-flops. They have a lot of different silly clothing that they sell. Costco started off without much of a taste preference for clothing. A lot of their clothing was not form-fitting, it was baggy, it was tailored towards boomers, older people. But I've noticed something. Over time, Costco has had a bit better taste in their clothing. In fact, dramatically better. I don't know who they hired. I don't know the team behind those cultivating their taste in their clothing, but it's getting a little bit more refined. When I go into Costco now, I'm seeing clothing that strikes me as premium. It's a lot better than most other places. The Kirkland Signature brand, which at my house we call Kirky Sigs, is just getting better and better. For baby clothing, women's clothing, men's clothing, jackets, pants, swim trunks, everything. The quality's getting better and the style's getting better. And now Costco's actually coming out with stuff that looks shockingly like some of these top companies, two of them being Lululemon and Vuori. Here's a TikTok highlighting one of Kirkland Signature's new pants. This is a comparison of the Kirkland Signature jogger pants against the Vuori joggers. And again, the Vuori joggers are the high-end premium brands that routinely sell for over $90 a pair. So let's go ahead and take a look here.
A comparison of the Vuori joggers to the Costco dupe. The Vuori joggers are the darker blue on top, and the Costco joggers are the lighter blue on bottom. The Costco joggers seem to be about an inch wider and longer than the Vuori joggers. Both joggers have identical elastic waistbands and identical strings.
Both joggers have identical elastic waistbands and identical strings. Now, the waistband and string is carefully designed. This is a part of the pants that make these premium ones so good. They're really good. But just look at this comparison. It gets closer and closer.
The Costco strings have a plastic end, where the Vuori strings have a more metal end. Both joggers have pockets. The Vuori have their little patch, which of course the Costco don't. Both joggers have a cuffed ankle. And both joggers are made with a super soft fabric. The Vuori might be slightly softer than the Costco fabric. The Costco joggers are $12.99, where the Vuori ones are $94.
And there you have the price at the end. Now, I've actually purchased both of these. So I have a Vuori jogger pants and I have the Costco Kirkland Signature ones, and they are indistinguishable without seeing the logo. It is insanely difficult to tell them apart. The only difference that I can really tell between the two pants is that Costco's are $13 and Vuori's are $100. I can literally go out and buy these ones for my entire family, for 5 people, and pay the same price or even under what I would pay for one pair at Vuori. This is Kirkland Signature. Kirky Sigs are now competing directly with Vuori. And shoppers are realizing this. They're going into Costco's and realizing that the only difference between the actual name brand Vuori and Costco's Kirkland Signatures are that Vuori has a 1-inch little patch on it. So you're paying an extra $80 for that 1-inch patch. Costco, of course, can offer these premium products at $14 because they don't try to make money on these pants. They don't care about the margins. Vuori makes all of their money with the margins. Costco makes their money with the membership. So Costco's trying to offer the most value for customers just so they'll pay for their membership. And that business model comes after companies like Vuori. And they're not the only one. We have another example here, but this time with Lululemon. This Costco member and Lululemon shopper noticed the similarities between one of Costco's Kirkland signature jackets and a Lululemon jacket.
I'm at Costco and they have these sweaters that look just like my Lululemon hoodie. Like it feels like it looks like it. I actually have it in this exact color. So I wanted to show you without embarrassing myself. So here we go. Okay. This is the green one and it has like the finger holes. This is the blue one. Look at it. It looks exactly like my Lululemon zip up. With the armholes, it's like, seriously. This is a dupe. And it's only $14.
You get this premium jacket that Lululemon sells for $100 for $14 at Costco. Now you may argue that the customer overlap between Costco and Lululemon is not huge, but I actually disagree. I think there's a huge overlap between the people shopping at Costco's and shopping at Lululemon and Vuori. And people that shop at Costco's want to save money. That's the whole reason they're in the store. When they see these clothings marked down 80% and they can tell that they're fairly indistinguishable from the original, I think a lot of them will choose to switch over. That's going to eat into the margins, eat into the company's profits going forward with Lululemon. Now, I know that there's international growth, there's digital growth, there's lots of growth paths for Lululemon, but these type of competing forces, all the various brands, all the Fabletics, the Lululemons, the Vuoris, all of them competing for the same demographic, along with the major players, companies like Costco now stepping into the fray, to me, it just feels a bit risky. It just feels a bit risky. I like having more certainty going forward with my companies. I think Lululemon will do well. If I had a guess, I think it will go up. It's traded down a lot, so I'm not saying it's a bad buy right now. I think if you have this as part of your portfolio, that's sensible. But for my portfolio, my concentrated position size, the amount of money I'm putting into every position, I want a bit more predictability. Now we move on to the other big news of the day. NVIDIA is doing NVIDIA things, which means it's going up multiple percentage a day. Today it was up 5% based on just momentum. We have the note here from Qualtrim. Now, normally you expect some specific catalyst to cause a company to go up 5%, like some news release, some press release, an earnings report, some change in leadership, something that causes it to go up 5%. NVIDIA shares are trading higher amid continued AI momentum and ahead of the upcoming stock split. It's just trading up because of continued AI momentum. No specific catalyst. The stock is just going up day after day. It's really incredible to see. Like it noted there, it is now the second largest company in the world, beating out Apple and now just behind Microsoft. NVIDIA is up 147% this year, adding $1.8 trillion this year in 2024. Today, the shares rose above Apple. The last time NVIDIA was worth more than Apple was in 2002, 5 years before the first iPhone was released. At the time, both companies were worth less than $10 billion. So it's been a long time since NVIDIA has been ahead of Apple. 2002, now in 2024, we see it again. That monumental rise. And you see both of them right here. It really is just breathtaking. It is incredible. This seems at first glance like it's just unreasonable. How could the stock rise that much? But when we look at NVIDIA and what it's done, we can just take a look at the earnings per share. Look at this chart of the earnings per share going back since 1999, and it's astonishing. You can't even see the EPS in 1999. It was pennies. For years and years and years, it was pennies and pennies. Only until we got into 2022 did it surpass $1. So we have 2 decades of it being under $1, most of the time under 30 cents. Then we have it being $1 in 2021, going back down, and then this meteoric rise in 2023 of it going up to $6 per quarter, up to $25 per year. Right now, NVIDIA deserves its success. It deserves to be where it is. The earnings are growing faster than any other company, the free cash flow is growing at the same speed, the revenue is growing at the same speed, and they're behind one of the biggest, arguably the biggest, secular trend in the world, which is artificial intelligence. I think it will be a matter of weeks until NVIDIA surpasses Microsoft. Microsoft is chugging along, it's doing just fine, they continue to grow above 10%, they're growing their earnings around 14 or 15%, so Microsoft is a true compounding machine. I don't mean to talk down Microsoft at all, but it's nothing compared to NVIDIA right now. It's growing at a snail's pace compared to NVIDIA. NVIDIA is growing quarter over quarter faster than Microsoft's growing year over year. At that rate, NVIDIA will surpass Microsoft relatively soon. We've had a game over the past year of trying to pick the top of NVIDIA, the game that everyone has been trying to play. When will this thing slow down? When will the stock price take a breather for a bit? Where's the top of this stock? There's many people that have bankrupted themselves trying to short NVIDIA. Shorting a stock like this is a recipe for disaster. But the question remains, where is the top for this stock? When will demand for data centers slow down? And there's one sign, one fundamental analysis sign that we may have finally hit the top for NVIDIA. It's Jensen, the CEO of NVIDIA, signing a woman's chest. Now, it's not her skin, so I don't think I have to put a content warning on this, but there's actual photos, and these aren't AI generated, of Jensen, the CEO of a semiconductor company, signing a woman's chest. This has to be the top, right? This has to be the top. If there ever was a sign of the top, what could be more? The CEO of a semiconductor company, one that people should not know about. It should be a boring company, like Intel CEO. He's like a rock star. He's like a rock star at a concert signing girls' clothing. If there was ever a sign of the top, this has to be it. We've reached a landmark here with NVIDIA popularity, but as we've seen in the past, prices that get pushed up a momentum can travel a lot further than we think. There's still likely a lot of continued momentum in NVIDIA. When I look at this stock and the assumptions priced into it, I believe they're rather aggressive. NVIDIA has almost 40 years of earnings, forward earnings priced into the company at that very high earnings point of $6 per quarter, $25 per year. They're pricing in 40 years of that type of earnings. Either the company generates a lot more cash in the near term, they grow their free cash flow double, triple, or quadruple, or the other path is to grow their cash flow slowly, but for a long period of time of uninterrupted growth. If the company can do either of those, it can justify these valuations. I have concerns personally about the cyclicality of the business. NVIDIA is a historically cyclical business. That may have changed with how much we're using artificial intelligence, but that remains to be seen. We've only seen NVIDIA's demand rise for just over a year. Remember, in just 2021, they were doing $6 billion per quarter. Now they're doing $26 billion per quarter. So we have not seen whether or not this company is cyclical or not cyclical. Nothing has been proven yet. I don't know if or when there will be a glut in demand. And trading at nearly 40 times forward earnings and a 1% free cash flow yield, I need to be fully convinced that the stock isn't cyclical. So although I'm not bearish on NVIDIA, I'm not predicting the downturn, I am seeing more and more signs of a top of this company. And the CEO becoming a rock star feels like one of them to me. Now, finally, we have news that YouTube has somewhat admitted that they have a problem. They have a mole inside of the company, someone that's feeding outsiders information, someone that's leaking information. With YouTube, the information they're leaking is not about the latest iPhone design, right? It's not about the latest technology of the company. It's simply private videos. Companies are uploading private videos like PlayStation's channel and Nintendo and Grand Theft Auto, and those videos are being leaked. One incident of this occurred in 2022 when KSI attempted to give away over $10,000 in Amazon gift cards. However, KSI later realized that all of the gift card codes had been redeemed before the video was posted, sparking an internal investigation at YouTube. So someone watched the private video working at YouTube and redeemed the $10,000 gift cards before the video was released. The company reportedly started a similar investigation after the trailer of Grand Theft Auto 5 was leaked, but it's not clear whether it was related. All of this ties into what seems like an ongoing problem at Google. On Monday, 404 Media published reports based on Google's internal database records, and it found that Google Contractor was behind the 2017 Nintendo leak that offered an early look at Yoshi's Crafted World. So you have the Reddit post there. And it shows in this post, in the URL, admin.youtube.com. So admin meaning someone else that has special privileges to the website. So Google has employees at its company leaking YouTube videos before they're posted. This is an ongoing problem, and I think a silly one. You're working at YouTube. You have arguably one of the best jobs in the world. We've seen from reports that YouTube and Google especially tend to overpay employees. They pay way more than other related jobs, other ones with comparable skill levels. And someone at Google is jeopardizing both their current job and job with any other respectable tech company to leak different trailers for video games. This is one of the most ridiculous things an employee could do, sabotaging their future career by leaking trailers. Now that's going to be all for this episode. I hope you enjoyed. If you want to see more exclusive content, you can check out the Patreon with the link below. The Patreon includes full access to Qualtrim.com. It includes over 100 exclusive episodes, and it includes a Discord community. All of that with a free trial, and then after that, only $10 a month. Try it out for free. I think you'll love it.